What's next for the UK housing market in 2026? I'm Asaam, Homes Director at Lloyds Banking Group, and that's the big question we'll be exploring in this video. Before we peer into the future, let's start with a quick look back. The budget at the end of 25 had no major surprises for housing. Affordability and supply remain challenges, but falling inflation and easing interest rates means that the market is entering 2026 with cautious optimism. Now let's jump into the trends set to shape 2026. Okay, let's start with the topic on everyone's minds. What's the outlook for interest and mortgage rates this year? The Bank of England continued to shift in easing monetary policy at the end of 2025, and that means inflation is gradually reducing and it's creating space for interest rates to fall from their recent peaks. With that in mind, current forecasts suggest that base rates could settle around the 3.25%, with mortgage rates landing near 4%, which could really help restore affordability for some borrowers. Of course, there's always an element of uncertainty, and if there's a future rise in UK unemployment, that could impact things, but overall, the outlook is positive. Now let's go deeper into housing affordability this year. We anticipate house price growth in 2026 of between 1 to 3%. The good news, those falling inflation interest rates I mentioned, alongside wage growth, are supporting market activity. But affordability is still stretched, and housing supply remains constrained. In terms of the number of all mortgages transactions we expect to see in 2026, it's likely they'll remain broadly flat year on year, around 1.4 to 1.5 million. Overall, we anticipate the market will be stable, with the fundamentals, levels of housing supply, affordability and confidence continuing to set the pace. First-time buyers remain at the heart of UK's housing story for 2026. Their numbers have been increasing, but we do anticipate a slight dip in 2026 compared to 2025's stamp duty holiday spike. There's a clear divide to call out when it comes to first-time buyers. Those with parental support for deposits and those without. For the latter, especially those under 35, the challenge to get on the housing ladder is acute. There is some good news though. As we go into 2026, we see that policy and regulatory changes are moving in a helpful direction. Stress rates, which help determine the monthly payments that borrowers can afford, have reduced. This will increase people's access to mortgages, with most lenders upping how much first-time buyers can borrow relative to their income. But for many, especially those without family support to put towards a deposit, the barriers to home ownership remain high, and unfortunately, there's no single fix. We need increased housing supply, improvements in UK wages, and more targeted support for new buyers to help close the gap and make the dream of owning a home a reality for more people. So we've talked buyers, but what does 26 have in store for the rental market? The Renters' Rights Act, coming in May, will introduce the most significant changes to England's private rental sector in decades. These new reforms will aim to provide greater security, longer notice periods, and more flexible tenancies for renters. For landlords, the new obligations may increase their compliance costs and arrears risks. This may result in some smaller landlords exiting the rental market, while larger operators consolidate their portfolios. It's a trend we've already seen after similar reforms were introduced in Scotland, where landlord numbers fell 8%, yet rental stock grew 2%. So the headline's positive. Stronger protections for tenants, especially as more and older renters rely on the private rental sector. But effective and practical support will be key to making them work, and we expect the professionalisation of the sector to continue with greater rental stability. When I say the word regulation, you probably don't think of exciting digital innovation, right? Well, you'd be wrong. Right now, there's a lot happening behind the scenes to rapidly evolve the housing landscape. A key agenda on the FCA's Mortgage Rule Review consultation is on leveraging technology, such as blockchain and machine learning, to help improve the home buying and selling experience. The modernisation of conveyancing is a big focus of the government, with the potential to deliver a faster and more reliable home buying and selling journey, making the process smoother for all parties. And with 9 trillion tied up in UK houses, there's also an opportunity to unlock that value for things like energy efficiency home improvements and options for later life support. We know changes like this will take time, but direction is clear. Regulatory developments are seeking to shape a more efficient, more transparent market with greater support for buyers. When it comes to the housing market, where you live in the UK matters a lot. The average national house price growth might be projected at 1 to 3% this year, but that stat masks big regional differences. Markets in the North, North Wales, Scotland and parts of the Midlands could see greater price increases thanks to better affordability. As for London and the South East, high transaction costs and stretched affordability means that growth will unfortunately remain subdued. This North-South divide isn't a new trend, and while easing mortgage interest rates and price stability will support northern markets, southern regions will face ongoing challenges. Policymakers will need to keep these differences in mind when designing interventions. To wrap things up, 2026 promises to be a year of steady progress for the UK housing market. The outlook is one of cautious optimism. Falling inflation, lower interest rates and wage growth are supporting confidence. Regulatory change and digital innovation offer a path to more efficiency and support, especially for first-time buyers. But challenges remain. Affordability is stretched, supply is tight, and regional disparities persist. Getting on the ladder is difficult without family support, and the private rental sector will need effective enforcement as the new reforms come into play. There's no single solution. Progress will be incremental, shaped by policy, innovation, and resilience. For those ready to adapt, there's a real opportunity ahead. Thanks for watching, and if you'd like to hear more about how the UK housing landscape is changing, be sure to subscribe to our channel.